On our radar is Salasar Techno, ended FY23 on a strong note. Margins in Quarter 4 grew over 250 basis points YY, and the company closed the year with an order book of more than 1,500 crore rupees. To discuss how the execution is panning out in the new year and their guidance for FY24, we are now joined by Shashank Agrawal, who is the director at the company. Mr. Agrawal, good afternoon. Thanks a lot for joining us. It's been a good performance in Quarter 4 and FY23. Can you give us a sense of what the outlook is looking like for FY24? What are the order inflows that you're expecting? And margins, while they are very strong on Quarter 4 basis, it's a 100 basis points decline on an FY23 basis. What is the outlook here?
Good afternoon. Thank you. Thanks for having me here. Okay, the project execution looks very good. We've been able to execute quite a substantial amount of EPC work as well as our domestic manufacturing orders. Looking forward, as you confirmed that we have an order book of more than 1,500 crores, which includes local EPC orders as well as manufacturing orders, and which the EPC orders we plan to execute over a period of two years, and the manufacturing orders, of course, are for 3 to 5 months, ranging up to 1 year also. Overall, we are very well placed in terms of the execution, in terms of having order books, in terms of the orders in pipeline, or the amount of I would say the expectation of orders is very good.
And so when you say very good, Yes, Mr. Agrawal, when you say very good, can you quantify that for us? What kind of order inflows are you expecting? You must be in discussions with your customers, and a general quantitative outlook on your growth prospects as well.
So we have, the regular manufacturing orders from telecom. Telecom is at a very good demand at the moment. There's a lot of traction coming in from expansion of 5G in cities, as well as of 4G networks in the rural areas and semi-urban areas. So there's a consistent order visibility for next 6 to 8 months with a range of almost 30 to 40 crores per month. Apart from that, we have bidded some projects in EPC, wherein we have bidded more than 2,000 crore worth of orders in the pipeline, and we expect at least maybe 40 to 50% success ratio. So we expect at least another 1,000 crores of order coming in maybe next 3 to 6 months, which will be executed over a period of next 2 to 3 years.
Okay, and you're saying 30 to 40 crore of telecom orders you will receive on a monthly basis for the next 6 to 8 months.
That's right.
And what about thereafter? If you're so bullish about the 5G opportunity, how do you see this monthly run rate from telecom scaling up?
To be honest with you, we have been seeing a continuous demand from telecom. Even today, we are in a situation wherein, the demand is more than the supply. And, we are facing challenges in terms of meeting the delivery timelines expected from the customer. And I hope, I'm expecting this to continue for at least a year. There is a definite visibility for the next 6 to 8 months, but beyond that also, I don't see any reason why the demand should go down or anything.
Okay, so you've been talking about how you expect around 1,000 crores of order inflows in next 6 months itself. You've bid for 2,000 crore rupees. How much would exports be from that? For now, it's a smaller pie versus your domestic pie. 143 crore rupees is the order book from export markets. Would it be a higher margin product for you? Will you scale up your export order book as well?
Oh yes, we plan to do that. In fact, we are L1 already in couple of tenders, and we are expecting the LOIs or the orders to be issued in next maybe couple of months, which would be for a value of at least 200 to 250 crores coming from African countries. And of course, the margins are slightly better, at least now that we have worked out, since the commodity prices are a little down, and we have bidded these projects on fixed price basis when they were bidded. So margins are definitely improved, compared to when it was bidded.
What would the margin difference be between the export and domestic orders?
Well, at least 200 basis point extra margin in exports compared to domestic orders. minimum.
You said L1 is 250 to 300 crore in overseas orders, exports.
Yeah.
What about the domestic L1 orders?
No. There's no. The orders in domestic are all under valuation or consideration.
Okay,
Now we are-
got it. Sir, you've indicated that the total debt of the company stands at 272 crores as of 31st of March. You have some capacity expansion plans as well. So what is the debt number going to look like for you, say 12 months down the line?
Probably around 300 crores, not more than that.
Okay, and when does and can you talk about your capacity expansion? When does it come on stream and what will it do at peak utilization? What could be the revenue addition to the company and growth rates?
Okay, so we are expanding in a new galvanizing plant, which is a state-of-the-art, one of the largest plants in the world for galvanizing of structures. And this we are especially putting up to cater to monopoles demand, transmission line monopoles, wherein we have a confirmed order book of more than 100 crores as on date. So as soon as the plant is commissioned, we expect at least 100 crores extra to be added to the order, to the revenue of the company in beyond that. And we expect this plant to come up somewhere in the end of July, first week of August.
Okay, so 100 crores is what this plant will add in FY24 itself.
That's right.
Okay, all right. It was a pleasure speaking with you. Thank you so much for joining us. That's the word coming in from Salasar Techno. The stock has inched higher. It's up 1% after management commentary. So yes, take a look there. It is seeing some spike from the lows. We'll do